How do I use insurance appraisal to settle my claim? What is insurance appraisal? Insurance appraisal is not appraisal in the more common sense of the word, how you might think about a home appraisal or a jewelry appraisal, for example. According to the Insurance Appraisal and Umpire Association, or the IAUA, appraisal is a policy provision found in the loss settlement section of an insurance policy. Insurance appraisal is an alternate dispute resolution process, which can resolve disagreement when the carrier and policyholder do not agree on the amount of loss. It is an alternative to a lawsuit. Appraisal does not address coverage issues, but can include or exclude items based on causation, depending on the state in which the appraisal occurs. Whoa! That was a lot of insurance-y words. Can you break that down in layman's terms? Sure. More simply, there is an insurance claim on property, not on automobiles or liability. The claim is covered by the insurance company. The insurance company and the policyholder don't agree on what it will cost to fix the damage. Instead of going to court, the insurance company and the insured can resolve the disagreement about costs by using the appraisal process. Important disclaimer. Insurance appraisal rules, and really insurance rules in general, differ by state. They can actually vary greatly depending on what state you're in. This video is instructional and intended to be general in scope. Check with a local insurance appraisal professional for more specific rules in your state. Also, check with qualified legal counsel as well. Well, that sounds pretty good. I think appraisal might work in my situation. I think my carrier is underpaying my claim and they won't change their estimate. What do I do? How can appraisal help? The basics of insurance appraisal are like this. And again, check the rules in your state. 1. Either the carrier or the insured demands appraisal, i.e., they send a letter to the other party invoking the appraisal clause. 2. Both parties have 20 days to choose their own appraiser. Often the demanding party lists their appraiser contact information in the demand letter, though it's not required. And 20 days is usually the rule, but that can vary by state and can also vary by policy. 3. Once the appraisers have been chosen, they get together and choose what's called an umpire. The umpire is considered the third member of the appraisal panel. If the two appraisers cannot agree on the amount of loss, then they submit their differences to the umpire. 4. Once the umpire is chosen, the appraisers attempt to set the amount of loss. Often they meet at the loss site and discuss necessary repairs and separately write estimates for the amount of loss. 5. If the two appraisers cannot agree on an amount of loss, they submit their differences to the umpire. 6. As long as 2 of the 3 appraisal panel members agree on an amount of loss, that is the awarded claim amount. Each party pays its own appraiser, and the umpire fee is typically split between the parties. Why does that work so much better than just negotiating with the carrier? Carriers have become more dogmatic as time goes on. Their adjusters have limited leeway in making adjustment decisions. Often, claims decisions must get management approval, and carriers require their adjusters to follow internal estimating guidelines, even though those guidelines are not part of the policy, and in some cases, those internal guidelines conflict with policy requirements. More and more carriers have taken away decision-making power from their field adjusters. Many carriers have gotten to the point where it is pointless to discuss claims with them. The adjusters have no power to remedy disagreements or issues, and no amount of documentation can allow carrier adjusters to stray from their internal guidelines. The advantage of the appraisal process is that both the carrier and the insured are required to hire an independent third-party appraiser. Many states also require the appraisers to be disinterested. In other words, their pay or fee cannot be tied to the result of the appraisal. Hourly fees or flat fees are the most common fee structure for appraisers and umpires. The insured and carrier are not supposed to direct their appraiser. It does happen. However, even if these rules are violated, both parties can hope to get an equitable result from the neutral umpire. In many cases, appraisal is simply used as a tool to be able to negotiate with someone who actually has decision-making abilities, as opposed to wasting vast amounts of time with adjusters with no decision-making authority. The less authority given to adjusters by a carrier means a higher likelihood of appraisal being needed to settle a claim. In some cases, carriers use appraisal to avoid bad faith litigation, which leads us to one of the strong advantages, or disadvantages depending on your perspective, to appraisal. In most cases, appraisal is final. There's very little ability to challenge the results of an appraisal. If a party likes the outcome, then it's a good thing that the award is very rarely overturned. If a party does not like the outcome, there is little recourse to overturn the appraisal result. Again, rules vary by state. Before you make the decision to demand appraisal to settle a disagreement on a covered claim, it makes sense to discuss the claim with a qualified attorney as well. There may be reasons why litigation offers better options than the appraisal process. As mentioned before, appraisal cannot be used to resolve coverage disputes. If your claim was completely denied and you disagree with that outcome, litigation might be your only option to resolve the dispute. Again, talk to a qualified legal representative as well as a qualified appraiser to better understand your options.